I think well done to Powell and to the Fed for moving significantly from behind the curve to the curve and a little bit even surprising the markets. I do believe that the markets should be sort of slightly more concerned rather than not so much from the Fed, but from their own misconceptions and misinterpretations. I think the risk has now moved away from the Fed towards the markets. Up until last year, the risk was the Fed. Is the Fed going to realize it's behind the curve, that inflation is rising? It is not transitory, but it's sticky and elevated. And when will they take action? We saw that. So I think the risk from the Fed has been averted, and it's now squared into the markets. And we saw last week, the markets got a little bit ahead of themselves and started rising yields from 150 all the way nearly to 180. And I think it's the misconception of the market or misinterpretation of the market which could potentially threaten risk assets rather than the Fed. I think the Fed is stable. I think the Fed will adjust depending on what the market developments are. But my eyes would be more on the market now than the Fed.
Thanos, I'm a little bit confused by that, because surely the market is only taking its lead from the signals that it's getting from the Fed about how it intends to adjust monetary policy from here on in. So the yields are not operating in isolation from the messaging that we're getting from the Federal Reserve. Just help me understand here why you think the market may be selling off on the curve too soon.
I think it's very much on the sort of the fear and greed that the market has. The market was also behind the curve. We sort of been expecting inflation. The market was not so convinced about that. It stuck with the Fed. It fell asleep, if you like, back in the summer when the yields were rallying all the way down to 120. And it's sort of shaken and aware that there's this real risk of inflation coming through and being a little bit higher. And I do believe that the Fed and the market sometimes gets a little bit ahead of itself in terms of momentum, in terms of the trends, that it becomes from a sort of a slightly concerned to slightly more exaggerated worries. And we could see the market trying to push yields potentially, especially if today's inflationary number is higher or in line with expectations, push it a little bit higher, closer towards 2%. We think this is overdone. We don't think the Fed would be happy with the 2% 10-year yield. So in that sense, it's the market which will be pushing it, and the Fed will be adjusting its rhetoric and bringing the market back into line. So it's the exuberance of the market rather than the Fed, which could create a little bit more instability and volatility in the months or quarters to come.
Sorry, Thanos, why should we be congratulating a gentleman rather than grilling him on his testimony for reappointment? Why should we be congratulating a man, the most powerful man in monetary circles on the planet as well, for getting wrong the nature of inflation for the whole of 2021? Why should we congratulate him? I don't understand. We should be appalled at someone who has more data points than anybody else on the planet at his disposal and got it wrong for a year.
I'll tell you why, Steve. And we all get things wrong. And let's be honest here, we all get things wrong. And the Fed did get it wrong. But I remember, because we were sort of shouting, guys, get to grips with it. There are real reasons why inflation is going to be different this time compared to the GFC. And in June of last year, that was the first inclination that he was starting to adjust his rhetoric, starting to open to the realization that potentially this could be a little bit more than transitory. And it took a few months to change, to adjust. The reason why I'm congratulating Powell and the team is because they realized at some point that they were wrong in terms of the data analysis, and they adjusted and took corrective action. Whereas, and this is the key point, whereas the ECB has not. So the RBA, the BOC, the Bank of England were all behind the curve, but they changed the rhetoric on the back of the data, adjusted their policy, and turned more hawkish, even the Bank of England raising rates. And the Fed did that as well. So,
all right, well,